Good morning, ladies and gentlemen, and welcome to the Q2 FY23 earnings conference call of Endurance Technologies Limited, hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nishit Jalan from Axis Capital Limited. Thank you, and over to you, Mr. Jalan.
Thank you, Michelle. Good morning, everyone. Welcome to Q2 FY23 result conference call of Endurance Technologies. From the management with us, Mr. Anurang Jain, Managing Director, Mr. Ramesh Gehani, Director and COO, Mr. Massimo Venuti, Director and CEO, Endurance Overseas, Mr. Satyajit Ray, Director and Group CFO, and Mr. Raj Mundra, Treasurer and Head Investor Relations. I will now hand over the call to Mr. Jain for his opening remarks, post which we can have the Q&A session. Over to you, Mr. Jain.
Thank you, and good morning to everybody. I would like to share details of how we have done in the second quarter of this financial year. In India, the second quarter of FY23, as per the CM data, the two-wheeler industry sales grew by 7.35% compared to quarter two of the previous financial year. Scooters grew by 15.78% and motorcycles grew by 5.62%. The automotive industry in India had a growth of 12%. In our overseas operations in quarter two of this financial year, the EU and UK markets saw an increase of 0.4% in the volume of passenger cars sold, while our European sales grew by 25.9% in euro terms. I will now brief you on the financials of the second quarter of FY23. During quarter two of this financial year, as compared to previous year's same quarter, a consolidated total net income grew by 25% from rupees 18,957.5 million to rupees 23,690.6 million. Consolidated EBITDA grew from rupees 2,681.9 million to rupees 2,800.2 million. Consolidated EBITDA margin was at 11.8%. The profit after tax degrew from rupees 1,333 million in quarter two FY22 to rupees 1,314.9 million in quarter two of this financial year, and the PAT was at 5.6%. This included the income of the Maharashtra PSI scheme incentive of rupees 284.61 million. There was no consolidated net debt, and company had a positive cash flow of rupees 2,838 million. During quarter two, our standalone total income grew by 26.9% from rupees 15,057 million to rupees 19,113 million. Standalone EBITDA grew from 2,170 million to rupees 2,377.4 million, with an EBITDA margin of 12.4%. Standalone profit after tax grew from rupees 1,223.6 million in quarter two of FY22 to rupees 1,312.7 million in quarter two of this financial year, and the PAT was at 6.9%. This included the income of the Maharashtra PSI scheme incentive of rupees 284.61 million. Would like to mention that Endurance is focused in both its Indian and European operations for a profitable growth and on growing higher than the industry growth. The detailed financials are available with the stock exchanges and on the Endurance website. I would like to now share certain key points till quarter two of this financial year FY23. In quarter two of FY23, 80.7% of consolidated total income, including other income, came from Indian operations, and the balance 19.3% came from our European operations. In India, till date of this financial year, rupees 6,928 million of new business has been won from OEMs other than Bajaj Auto, which included HMSI, which is Honda Two-Wheelers, Hero MotoCorp, Ather Energy, Hero Electric, and Tata Motors. I would also like to mention that we have rupees 22,822 million worth of requests for quotes from OEMs. Our consolidated net worth is now in excess of rupees 40 billion. Our customers recognize us as a trusted and capable partner in their value chain in terms of both technical and financial strength. The electronics vehicle market continues to offer significant opportunity for growth to the auto component industry. It is estimated that the Indian EV market will touch rupees 150 billion by 2030. Therefore, at Endurance, we have taken a major step forward to harness this opportunity by executing a shared subscription and purchase agreement for acquiring 100% of equity share capital of Maxwell Energy Systems Private Limited in a phased manner. We have already concluded acquisition of the first 51% stake in Maxwell. Maxwell, as you all know, is in the business of advanced electronics, particularly in the battery management system or the BMS for automobile, EVs, and battery packs. We plan to leverage Maxwell's deep technical expertise and its BMS deployment experience in India and Europe. We are offering our products to multiple new clients, including Indian and overseas automotive OEMs and manufacturers of battery packs. We have already started supplies to Hero MotoCorp for their new EV, which was launched in October. With the existing order book, the order pipeline, the technical capabilities and synergies between Endurance and Maxwell, we are confident of achieving our goals in the embedded electronic space. As you are aware, we have added a high technology new product, which is the drive shaft. Drive shaft is a proprietary product and an EV agnostic product in an automotive application. A drive shaft transforms the torque generated from an engine through its transmission to the wheels. The application is for three-wheelers and four-wheelers, including some light commercial vehicles. The launch of the drive shaft has opened an additional revenue stream in the transmission segment for Endurance and will lead to a significant business growth opportunity for Endurance in the future. We won orders from Mahindra and TVS, and commercial supplies have started to Bajaj from July 22 onwards. To help our overseas operations to grow in the European two-wheeler component profitable aftermarket business, we have acquired an Italian company, Freno Tecnica, in July 22. This company is involved in the business of friction materials and components for braking systems like brake pads for two-wheelers. In 2021, they had a sales turnover of 3.6 million euro with an EBITDA margin of 1 million euro. So it's a highly profitable business. They have a renowned brand name called Brenta in the aftermarket and replacement business. With this acquisition and acquisition of the two Italian companies, namely Grimeca and Adler in 2020, we want to create a center of excellence in Italy and grow in the premium components in the two-wheeler segment. This acquisition gives growth opportunities to the Endurance Group in the European aftermarket business, as well as it provides access to in-depth know-how for process technologies of friction materials, especially for brake applications. We are looking at more such acquisitions. I would like to mention that Endurance is focusing on a more value add and a profitable product mix in its future business, which includes braking, suspension, advanced electronics, and aluminium casting supplies to two and three-wheeler OEMs and new startups. 200cc plus motorcycle brakes and clutch assemblies with help of our acquisition of Adler and Grimeca in Italy in the year 2020. The 200cc plus motorcycle brakes business has already started last year, and the 200cc plus motorcycles clutch business, which is your new assist and slip clutches for the high-end bikes, will start in Q1 of the next financial year. The other product mix focus areas are the paper-based clutch assemblies, replacing the fork-based clutch assemblies for motorcycles to get a better value add. Continuous variable transmissions or automatic clutch for scooters with Hero MotoCorp. We are at an advanced stage of testing and we expect to start supplies from the next financial year. This is a bit late, but we will start the supplies with them. We will also increase anti-lock brake systems or the ABS business for 150cc plus motorcycles with a collaboration with Beijing West Industries. We've already started supplies to Bajaj Auto and Royal Enfield and are engaged with other OEMs for winning new ABS business. We are increasing the business of the 200cc plus motorcycle inverted front forks and adjustable rear monoshock absorbers. This is with the help of our collaboration partners KTM and AG. We are working with KTM to increase supply of both on-road and also start with off-road motorcycle higher technology inverted front forks and rear shock absorbers. And we have already made a 3-year business plan for this. We have also started supplies of inverted front forks to HMSI or Honda two-wheelers in India and won orders for inverted front forks for 3 of Hero MotoCorp's new platforms, vehicle platforms, and are also engaged with other OEMs on the inverted front fork new business. This is indeed a fast-growing business for Endurance. We are also focusing on fully finished machine castings as compared to raw casting and semi-finished castings for all the 2, 3, and 4-wheeler OEMs. As the disc brake assembly business is growing with addition of Bajaj, TVS, Royal Enfield, Yamaha, Hero MotoCorp, and Ather Energy, as well as HMSI new business wins, our second plant at Walud, Aurangabad, has been set up with a high increase in volumes and has already started operations. As you are aware, the supply of two-wheeler ABS assemblies to Bajaj has started in the last week of September 2021. ABS assemblies to Royal Enfield started from February 2022 onwards. You may be aware the competition is mainly from Bosch, which controls a major market share in the Indian ABS two-wheeler market, which requires approximately 3 to 3.5 million ABS assemblies per annum. We are now in the process of even getting our dual-channel ABS cleared by the end of this calendar year, and we are scaling up additional assembly lines for adding an addition of 200,000 ABS assemblies per annum to our existing 400,000 ABS assemblies per annum, which will give us a total capacity of 600,000 ABS assemblies per annum. We are also further planning to increase these volumes to 1.2 million ABS assemblies per annum by the second half of 2024. So this is a very good growth opportunity for us. We are also focused on supply of products for EV 2 and 3-wheelers. We have started supplies of brake assemblies, suspensions, and aluminum castings for electric scooter and 3-wheeler. After the acquisition of Maxwell, we are also supplying the battery management system for 2-wheeler EVs and battery pack makers. Our focus is to supply our EV products to 2 and 3-wheeler OEMs, both existing and new. In this financial year, we have won rupees 2,168 million of new business for EVs till Q2 of this financial year. All this business has been planned to start with this financial year or early next year and should reach peak volumes by the end of FY24. The total business win for electric vehicles is today at 4,891 million till date. This does not include a business which we just won a couple of days ago from Hero Electric, which is about a 1,200 million rupee business for both the BMS and suspension, and this business should start by early next year. So this actually takes our business win for EV vehicles to now slightly more than 6,000 million till date. We are also focusing on the e-bicycles business, especially for suspension, battery management system, and brakes. This is both for our Indian OEMs and exports. Also, due to increased orders from Bajaj, Yamaha, India, TVS, and Hero Electric, we have added a new plant at Chakan to help increase supplies from 240,000 alloy wheels a month to 380,000 alloy wheels a month. This plant has already started operation in July 22, and the peak volumes should be done by next month. And the supply to TVS has also started in July 2022. As far as Europe is concerned, till date of this financial year, we have won 42 million euro business mainly from Porsche, Daimler, and Stellantis. As you know, we had won 70 million euro business last year, and this year till date it's 42 million euro. So both India and Europe are really aggressive going after new business. So this is a very, very good sign for us, what we are seeing in the last 2 years, and the trust with our customers. I would also like to point out that Endurance, both in India and Europe, is actively pursuing its focus on gaining access to new technologies and focusing on new product organic and inorganic growth. As I mentioned earlier also, Endurance has already entered two backward integration product areas, which are import substitutes also. First is the aluminum forging axle clamp business, which is with a collaboration with FG and Italy. We already started supply since April 22 for both Bajaj as well as for exports. We have recently won an order also from Hero MotoCorp for a different application of an upper bracket aluminum forging, which will also start by next year. So the aluminum forging itself can become a segment, and it's a huge opportunity for growth for us. The second product is, of course, the wire steel weight hoses for ABS applications for mid and high-end bikes. These supplies have already started. So both these projects, I would say, are helping us already to make higher profit margins in these businesses of inverted front forks and also for ABS. In the first half of this financial year, our aftermarket sales grew 16.2% from rupees 1,727 million in the previous year to rupees 2,006 million in the first half of this financial year. We are exporting our aftermarket parts to 31 countries, and we are adding 4 more countries in this year, which are Rwanda, Burundi, Brazil, and Vietnam. So aftermarket sales growth is a very large focus for us, and this will continue to be like that. In the first half of this financial year, the export sales for India's standalone business decreased by 8.4% from rupees 878.56 million in the previous year to rupees 804.91 million in the first half of this financial year. This major impact was due to the lower orders of aluminium die casting exports to the European OEM. That's the main reason. But I think slowly it's coming back. We are getting new orders also from European OEM for castings. So the future looks quite good actually. We are also extremely happy to inform you that Endurance has been judged as one of India's best managed companies based on Deloitte's Best Managed Companies 2022 program. On the environment front, I would especially like to mention that Endurance is striving to be carbon neutral in its plants by effective use of solar power and wind power, creating carbon sinks by driving tree plantations and thereby creating dense forests, and driving use of natural gas and LPG in place of electric power and furnace oil. I'm happy to tell you that the use of furnace oil has been completely stopped now at Endurance. We are also focusing in lowering hazardous waste generation and to achieve zero waste to landfill. At Endurance, it will be our continuous endeavor to grow through organic and inorganic growth with a focus on technology upgradation, quality improvement, cost and environment, health and safety. We will do our best to fulfill all our stakeholder expectations by following our 5 values of customer centricity, integrity, transparency, teamwork and innovation. We at Endurance have a very positive outlook based on our large new business win in the last 2 years, including for electric vehicles, both in India and Europe. With these opening remarks, I would like to invite questions from all of you. We also have the Maxwell founder and CEO, Mr. Akhil Aryan, on the call to answer any of the questions you may have on Maxwell. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Jhawar from Investec. Please go ahead.
Hi, thanks for the opportunity. My first question is on India business. I'm wondering if you can help us understand the breakup of the 7 billion order win in this year. And also, you indicated that the cumulative order wins for EV is about 6 billion. Is it including Bajaj or excluding? If you can include Bajaj number, that will be great. And a related question is that any breakthrough into new age OEMs, for EVs in India? Yeah.
Yeah, sure. So if you see the 7 billion order which I mentioned is actually 6.9 billion. The breakup is from HMCL for castings. It is from HMSI for the rear shock absorbers and front shock absorbers. It's from Tata Motors for their high-end machine castings. It's from Hero Electric for alloy wheels. I have not counted the recent order of the BMS and suspension. That's a 1,200 rupee million order. That I have not counted in this 6.92 billion. Then we have Ather Energy for the battery box housings, which are there. Then we have orders, of course we have a lot of orders from Tata Motors, Hero MotoCorp, Hero Electric, HMSI. We also have from Yamaha. There's a large order for their suspension, which we have just got. It's a KOY, it's a B693 model. From TVS, we have got brakes orders, very large brake orders for the new NN360. And then we have orders from Royal Enfield also for castings. So basically, what I would say, the best part is that in this order, 80% of the business is new business and replacement is 20%. So that's the good part. And of course, this 6.9 billion doesn't include the 1.2 billion which we got from Hero Electric just two days ago.
Okay. So then,
breakup of the figures, which normally but basically it's a combination of suspension, braking, and castings.
Yeah.
And basically, it's a breakup. I'll have to add up the figures to give you the differentiation. But the customers mainly are, HMSI, Hero MotoCorp, Royal Enfield. There are also Mahindra Electric. There's TVS. There's Ather Energy. Then there's Tata Motors and Suzuki two-wheelers.
Fair enough. And, the second part of the question was on, can you give us a EV order book including Bajaj?
Yeah, so EV order book now, which is now 6 billion, includes 1 point. So in this figure of 6 billion, you have Bajaj of 1.24 for the two-wheelers and three-wheelers, scooters and three-wheelers. But the other main players in this is Ather. There's Hero Electric. There is Mahindra Electric. There is a company called Bounce. And as we speak, we are engaged with all these new big companies which are there in the market, and we hope to give you some more good news in the next call which I have. Because we are just going after new business and of course the EV business, basically for braking, for suspension, for castings, and for battery management systems as of now.
Okay. Yeah. All the best for that. My second question is on the European business. Now, there are two things to this. Number one is that how have been the customers, reacting to price increase? By when should we, see that the customers agreed for higher energy cost? And the second is, how is the production schedule for customer looking like, in the next couple of months?
So I will request Mr. Venuti, our Director and CEO, to answer that question.
Okay. Yes. The first question regarding the energy, as you know, we are in this quarter, we have had an important peak of energy cost. We reached 472 euro per megawatt compared to 70 of the previous financial year, and 208 euro per metro cube compared to 17 of gas. First of all, it's very important to underline that the European government and also Italy are supporting us with different contribution. Only to give an idea, in Italy, we received from the government in this period of time, in this quarter, more or less 25% of contribution. And this 25% will grow 40% in the month of October and November. In this moment, they define only the month of October and November. And we are discussing, as usual, with our customer in order to find a solution for the future. I'm very happy to inform you that starting from the 1st of October, we found an agreement with our major customer. And so it means that in the next quarter, the contribution from the government and the contribution from the customer will not cover 100% of the increase of energy costs, but we are pretty confident about an increase of our EBITDA. Why we are not closing in a structural way this agreement with our customer? Only for one reason, because unfortunately in this moment in Europe, the policy of the government of each country is different. For example, in France and Spain, they decide for a price cap for energy and gas. In Germany and Italy, unfortunately not. Germany officialized that they will put 200 billion of euro in order to support the consumer and also the companies, but it's not so clear as they will support everybody. They will officialize this strategy at the end of November. In Italy, as I told you, they are supporting us, but in a temporary way, and they renew time to time the situation month per month. And so it's very difficult to find an agreement with the customer because everybody, the OEM, are waiting an official position from the European Union. And so, but the situation will improve in the next months for sure. Speaking about the production, in this quarter, the market closed with the registration, the registration were up by 0.4%, and so more or less online compared to the previous year. But as endurance, we performed very well. We increased the turnover of 25.9% from 45.3 million euro to 57 million euro. And please consider that the positive aspect is that the production in the same period, the production of passenger car in Germany was up by 42%. And so it means that for sure they are increasing again the stock because they used the stock in the previous quarter. But apparently the volume for the next month are positive compared to the previous year.
Okay, that's good to hear. Now, just Massimo, just to summarize what you said, that the energy cost because of the government measures should be slightly better in Q3, and large customers of ours, they have agreed for a price increase from Jan onwards. Is that understanding correct?
Yes, so yes.
Yeah.
They will support us in a different way, considering the different customer in different countries, but I'm pretty optimistic to be able to recover an important part of this increase of energy costs. Only to give you an idea, in the last quarter we have had an impact in our profit and loss of 1.9 million euro. If I consider 6 months of this financial year, the total impact was 3.6 million euro. The EBITDA of this quarter would have been 16% without the energy cost, and the EBITDA of the 6 months, 16.6% without energy cost. And so in this moment, our profitability is more or less online compared to the previous year, but unfortunately, the only problem is the energy.
Okay, perfect. Thanks. That's it from my side. All the best. I'll join back in queue.
Thank you. We have the next question from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Thanks for taking my question. So first, it's on the Maxwell Energy. If you can talk about the order book, because I think when we acquired 51%, I think that time the orders in the pipeline was about 150 crores. So if you can throw some light, how much orders have increased, specifically because it's actually an electric order rather than counting the alloy wheels for the electric vehicle. So if you can throw some light on that, and anything, if you can comment on the acquisition price, and then it should be done 100%.
Yes. So of course, I will request Akhil Aryan to reply to this. So as of now, the orders are in excess of rupees 105 crores, because some of the orders of 150 included, I think, Hero MotoCorp also. But at the same time, there are leads of 125 crores being pursued. Plus, we have got another 70 crores or 700 million of order, like I said, for the BMS from Hero Electric 2 days ago, which have to add to the orders in hand of 105. So it becomes 175 crores or 1750 billion. And what was your next question, which I request Akhil? I actually let Mr. Akhil Aryan further speak on this. Acquisition cost we can explain. So the acquisition cost we can explain. Would you like to explain? I'll request Mr. Satyajit Ray, our Director and Group CFO, to answer this.
See, to answer your question on acquisition cost, there's a stock exchange release which we've given post our results yesterday. It's quite clearly mentioned there. We've purchased 51% of the company through primary issuance and secondary purchase for a consideration of 1350 million rupees, that is 135 crores. And with that, Maxwell became a subsidiary. That happened on 1st July. So the results are getting consolidated from 1st July 2022. the balance 49% of Maxwell equity share capital will be purchased by Endurance in 5 tranches spread over next 5 financial years, and the consideration of each tranche will depend on Maxwell achieving certain financial targets as specified in the share purchase agreement.
Thanks for that. My question was more that is there, I read the press release, and my question was that in this next 5 years, I was asking more of the benchmark. So the question was more that when let's say the electric market, which is growing very fast in the last, let's say, 1.5 years, and last 5 months have been increasing the growth has been higher, also led by festive. The order book seems not increasing. Here is a new launch, but not in the top 5 or the top 6 market share people in electric. Can you throw some light how we are looking to increase this pie? And I think some part of the order was also overseas. So anything on that would be helpful. That's my question.
Okay, so what I gave you was a total figure, which is about 175 crores of order wins, including the recent 70 crores of Hero Electric. But I will request Akhil Aryan to answer this, because we are pursuing orders from every, I think, company which matters in this space. But let, I think, Akhil throw some more light on that. Akhil?
Yeah. Can you guys hear me okay?
Yes, we can hear you.
All right. So, yes, like Anurag mentioned, we already have about 175 crores in our order book. We have about another 125 crores in active lead pipeline. Our thought process behind the market is not short term, right? So we are not chasing the last 3 months or last 6 months volumes. We're looking at, what are the volume creators of 2025 or 2030. We have to identify the OEMs that are genuinely being serious about their EV plans, and also the ones that are building robust products that will stand the test of time. There is a lot of, of course, in the EV space with the numbers as well, there has been a lot of noise and very little signal. For us, we have chosen, in terms of business opportunities, we either go after high volume or high margin business. And so in India, our goal has really been identifying, especially with the new regulations coming in. You've heard of the new AIS 156. You've also seen the same 2 considerations, how the government is sort of evaluating improving safety and so on in the battery space and the vehicle space. We are now seeing how OEMs are responding to that, which ones are actually taking the additional effort to gear up and be in alignment with these, I would say, new regulations. Of course, there are some OEMs that have been in the market, right? Some with, I would say, Chinese DMSs that now have to eventually, like I also mentioned in my last call, that are now being forced, practically speaking, to localize that supply. And so we are seeing a lot more, I would say, conversations that are happening in our lead pipeline, where we are speaking to these OEMs. So that transition from China to India is happening as we speak right now. And then there are also some OEMs that have, traditionally built their own DMS that are in the market today, right? So an example of that is Ather, right? So Ather has their own DMS and they're in the market. So even if their volumes, so let's say in the last 3 months have gone up, there is not a space for us to sell to them. However, apart from them, all of the other, I would say, major OEMs that are coming into the market, including Hero, right? So Hero is basically the Ather, company, so to say. Like Ather is owned by Hero to some extent, but Hero MotoCorp is a significant customer for us, and not just Hero MotoCorp. Many other customers in India, as well as in Europe, are choosing to buy this from technology experts like us. So what I'd like to say over here is primarily that our focus is not necessarily on chasing short-term trends of 3 months or 6 months, who's selling more volumes right now by lowering their cost or doing something else. We want to focus on volume creators of 2025. So we are spending time integrating our technology and integrating our BMS into the battery pack designs of those OEMs, both in India as well as in Europe. And there is there is a vast, I would say, set of conversations that we're having over and above the orders that we already have in the pipeline that will help us gear up for the next FY and the FY after that in order to really ramp up as, like you identified, as the EV market starts increasing its pace and all of the serious OEMs step in. We want to be part of the journey moving forward.
Thanks. Thank you for that. I'll come back in the queue. All the best. Thank you.
Thank you. We have the next question from the line of Ronak Sarda from Systematics Group. Please go ahead.
Yeah, hi. Thanks for the opportunity. The first question, sir, on the standalone operations, the quarter-on-quarter, and even if I look at the YY growth, looks pretty strong, despite, Bajaj facing a lot of issues on their export market. So I'm assuming production would have got curtailed there. So if you can help us understand, what has driven this strong growth, also how is the product mix, and in conjunction to that, how has been the ABS revenues, seeing the scale up over the last, few quarters?
Yes, sir. See, I think it's, the business growth has mainly happened because of our new order wins over the last, I would say, 3 years. Even during FY21, I think we won 565 or 585 crores of new business, 5,850 million. Last year we won 7,650 million. And so far, like I said, we've already won almost 7 billion worth of orders till date. And we're going strong. This doesn't include the Hero Electric 120 million, 20 crore business we won 2 days ago. So I think the question is, like I've always said on calls, I have no control on the outside uncertainties. We at Endurance are going after business, profitable business, and doing a lot of cost controls, whether it is consolidation, more, operational efficiencies, helping in the product mix being better. And it's not about casting or machining. Casting, we are trying to improve the profitability by going for machine castings. I've said alloy wheels is doing quite well. We're expanding alloy wheels, like I said, gone to 380,000 alloy wheels a month from 240. Brakes is growing very fast. We have a new plant for brakes which has started. Got orders from EV companies also like Ather in a big way actually. We're almost like a single source there. So the question is, we are driven. One focus is of course EV, and luckily except for the clutch, all our products I've said are EV agnostic, with castings being different types, but similar machining centers, similar die casting machines. Only you change the tooling for the die casting machines. That's a good part. We're also doing backward integration to improve profitability. Like I said, steel braided hoses and aluminium forgings for our inverted front forks. Look, this has helped us to increase our margins. So these are both import substitutes. So we are doing, our strategy is of course outsourcing to our Endurance Vendor Association is one hand, to be able to focus on more important or critical operations in-house, like surface treatments or, different type of assemblies. But at the same time, we're also doing backward integration, which gives us higher margins, Also the product mix. Fortunately, brake, suspension, alloy wheels, machine casting business is really growing. And of course, the advanced electronics with Maxwell and as well as drive shaft is still at an initial, I would say a beginner stage. A long way to go. We have very big plans for both these, also areas. Also, I mentioned about aluminium forgings. It's not only about inverted front forks. We've got upper brackets for a conventional front fork from Hero MotoCorp. We are getting a lot of inquiries for other type of aluminium forgings. So I think it's a combination of product mix, technology products, focusing on upgrading products, technology products, on one hand, and for EVs, because EVs will grow for sure with the push which is happening on EVs. I'm sure it will grow. It will grow very, very fast. So we want to be a part of that growth. That's why almost this thing 600 crores of business, won already, and we are going strong on this business. And of course the cost controls, like I mentioned, whether it's consolidation of plants, operational efficiency, the purchasing is better. Like if you see Q1 and Q2, the RMC percentage of sale in Q1 was 67.6%. Q2 is 67.2%. So it's only gone down by 0.4%. but the EBITDA margin has gone up by 1.4%. So extra 1%, I would say. So this is the kind of focus we have on product mix and cost controls, And this is something we'll continue to do. Now, quarter 3, we're expecting a huge drop in, raw material prices because steel, like aluminium, is almost, I think, 51% or 52% of our purchases. Another 32% is steel. Different types of steels are there, different grades of steel. Both these are going to further go down substantially in this quarter. That, of course, helps at the EBITDA margins because your raw material percentage to sales, the moment it goes down, it has a direct impact on your EBITDA margin, that percentage. So of course, we are very optimistic. And I'll be very honest that looking at the way we are getting business and we are focusing on the efficiencies and as well as, the product mix getting better, more technology products. And the most heartening note is overseas with the energy prices now being addressed by the major OEMs, And I think the future, we are very, very optimistic on the future. And I'm just not saying it just because you are, this thing, because I only say what I mean, So I'm seeing, after a year, a lot of things which are positive in Europe especially because energy really, 18%, 19% EBITDA margin company has come down, so heavily to, 11.7, 11.8%. It's crazy. You can imagine what impact it would have done for us. And many companies are not even, I think, they're in a bad shape in Europe. But that has given us an opportunity to get new orders. And that's why such big business wins from Daimler, Stellantis, Volkswagen Group, including Porsche. So I just want to say that I think it's been a combination of sales growth, better product mix and cost controls, and purchasing being better.
Sure. So thanks for that. That's a really detailed explanation. Sir, 2 more questions. One for Mr. Aryan. If he can help us understand how the 2 new norms on the battery side on electric vehicles, the first coming on December 1st and then on 31st March, how does that change the entire supply chain for BMS, and what could be the kind of cost increase which a vehicle would see? That's one. And second, for Mr. Ray, sir, the way we calculate the subsidiary performance is, directly Concall minus standalone. Now with Maxwell getting consolidated as well, if you can help us understand, what kind of revenue and cost are sitting in the overall subsidiary numbers, so that we can decipher the Europe performance separately. That would be really helpful.
So I guess the first is for me. See, actually, we are very happy with the new norms, to be honest, because many of our products, practically all of our, BMS products, incidentally, from the start when we made the design, we wanted to take extra precautions more than were mandated by law, at least in India, because we were selling internationally, right? So when you want to supply to Europe, the US, we were already designing for global standards. And so as it stands today, many of our products by default comply with the new norms that have been announced by the India government or this AIS 156. There are some small, I would say, very unique things that have been also announced in phase 2 of AIS 156. And for that, some minor adjustments that need to be made for some of our products are being made as of right now, as we speak. But again, fortunately, a lot of this, because we have designed the technology as a platform and not as a product, it means that for us, we will not have to do fully new hardware design cycles. We are simply just implementing new firmware upgrades to our product, which will enable us to have, again, a compliant BMS. Again, like I said, most of them are already compliant for both phases. For the other products, where minor tweaks are required, we are estimating to be done before December, even before phase 1. Coming to new product designs, I think what's interesting specifically with these norms is that a lot of the guys who were buying, PCMs, which are protection circuits from China as a drop-in instead of a BMS, those guys are now realizing that, look, this is no longer going to work because the problem with, I'm not just saying this about China, but in reality, when you're buying a PCM instead of a BMS, the problem is that there is no firmware because there is no microcontroller, right? So you are basically in a place where you have a black box hardware that you just connect and it acts like a fuse, right? if something goes above a certain threshold, it just stops the battery from working. So there is no way to, I would say, tune it or write some firmware to make it meet or comply with the standard. So it's almost as if they have to find a BMS supplier instead of protection circuit. That increases the TAM, the addressable market for us in general significantly. And we knew at some point this was going to happen. And in the last 2 quarterly calls, I've mentioned this, that FAME 2 was just one step in that direction. AIS, of course, helps the adoption of reliable battery management technology because batteries are safety critical. Instead of just having a performance link, you also have to have a sort of safety angle when you're designing products. Last but not the least, I also want to highlight that not only is this sort of requiring a lot of these OEMs to source BMSs instead of PCMs, because of the FAME 2 subsidy, they are also trying to source this BMS locally, right? Which means that they have to source it from India. And in India, when it comes to an AIS compliant BMS, which is cost competitive because we have the volume threshold, we are definitely market leaders in that regard. And so we are seeing a lot more conversations happening because many of our competitors do not meet the standard. Some that meet the standard don't have the experience of delivering products for the Indian market. And some of the others that have that experience also will not be as cost competitive. So I think that overall, while the overall cost impact for companies that were using PCMs will be there, because they will have to move from PCMs to BMS. So maybe there will be an increase in cost for their vehicle. But in the context of us as a supplier of technology and BMS, I think that it has radically expanded the addressable market for our technology. And like I said, our BMSs are already compliant. Phase 1 and phase 2.
Got it. Thanks.
Okay, Ronak, to answer the second part of your question, I'll give you numbers for Europe and Maxwell separately because standalone numbers you already have.
Yeah.
As far as Europe goes, I'll give you numbers in euro. Quarter 2 had a total income of 57 million euro and an EBITDA of 6.6 million euro. Compared to last year, 45.3 million euro and 6.3 million euro of EBITDA. Now you must remember that quarter 2 to quarter 2, there's been an 8% depreciation of euro against rupee. So as far as rupee value is concerned, it will be lower. Now, as far as Maxwell is concerned, the total income in this quarter is 40 million or 4 crores. At EBITDA level, there's a loss of 61.5 million rupees or 6.15 crores. This is primarily driven by the fact that we considered employee cost build up, but a very major order started fructifying later. So there's a timing mismatch between revenue and cost. So that's why this kind of loss has come on such a low value of sales. And the last point from my side is that a straight arithmetical aggregation will not get you the numbers because between India and Europe, there are transactions, so there would be consolidation adjustments there.
Got it. Right, no, that's really helpful. So Europe was not as weak as, the overall numbers seem to be. No, that's really helpful. Thank you. All the very best.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to answer questions from all participants, please limit your questions to 2 per participant. Should you have a follow-up question, please join the queue. Thank you. We have the next question from the line of Sonal Gupta from L&T Mutual Fund. Please go ahead.
Hi. Hi, good morning, and thanks for taking my question. So just on, sir, like you mentioned, bookkeeping question. In the other operating income, is there any Maharashtra subsidy this quarter and last quarter? Any numbers?
Are you looking at the stock exchange publication?
Yeah.
See, the Maharashtra subsidy, that thing goes in revenue from operations. It doesn't go in other income.
Right. No, but I'm just trying to understand in revenue from operation, is there any number there?
Yeah, of course.
Can you highlight the amount?
Yeah, sure.
Okay.
Are you talking about quarter 2 or half 1? Which number do you want?
I wanted both numbers if possible, but
okay. Quarter 2, 22-23, the booking has been 284.61 million, which was covered by Mr. Jain in his opening remarks. And in quarter 1, the booking was 300.95. So half 1 total booking is 585.56 million.
Got it. And sir, in your comments previously, Mr. Jain, so you mentioned about the raw material costs going down. I mean, right now, I mean, if you look at the strong growth that we've seen on a year-on-year basis on the revenues, how much of that is because of the commodity prices going up, and how much do you expect to reverse in the coming quarters?
See, like I said, quarter 1, the RMC percent, I'm talking about standalone India right now.
Yeah.
The RMC percentage was 67.6, the quarter 1, the percentage to sale, which went down by 0.4% to 67.2. 0.4%. Our EBITDA went up from 11% in quarter 1 to 12.4% in India, which means we made up 1% because of sales growth, maybe better economies of scale, and also, cost controls. And the product mix being a bit better with ABSs going up, with inverted front forks going up, aluminium forging starting as an import, substitute. So, but I think operational efficiency also helps. So we have got an extra 1% EBITDA, which is only because of efficiency mainly and product mix, and of course sales growth.
Got it. No. What I was trying to ask is like on the top line. I mean, like if we see like say this quarter versus next quarter, given that you're saying that you're expecting sharp drop in aluminium, etc. How much deflation of top line do you see because of that?
Very difficult. Customers change their schedules every month. The question is very difficult to say. That's why I've always said since the IPO, higher than industry growth and profitable growth, which we will maintain. There's too many uncertainties out there, so we can only do our best. But yes, to answer your question, commodity prices, when they go down, we are looking at like the alloy wheel, alloy, some of the alloys, high-end alloys, there'll be a sharp drop there. Could be about 12%, 13% drop in price, which is very good for us. But that's because that's also a good 30-40% part of the total aluminium alloy purchases we do. Steel is going down. I was told about 6 or 8 rupees a kg on the average. So all these are good signs because see, once the RMC percent still goes down, your EBITDA margin percentage directly will go up. So that part we are sure of commodity prices coming down. But as far as sales are concerned, as far as we are concerned, we are going for growth. But how much growth I can't tell you. I just can't tell you. I can only tell you all the business wins we have done, and many of these businesses have started. But very difficult, to talk about the future as far as what that sales can be, the guidance can be. I really don't know. Like in spite of falling prices of commodities, we have a 26. We grew, in a big way in quarter 2 versus quarter 2. Because quarter 2 of FY22 was not that bad. Like quarter 1 when we were hit by Delta, quarter 2 was quite okay. Still we have grown. Because this is also because of new business wins in the last 3 years.
Got it. No, so that is what I was trying to understand, right? Like on a year, if it is easier, right? Like on a year-on-year basis, how much of the revenue growth you've seen is because of commodity prices?
Because of commodity, okay, now in this year, mainly I would say the first 4 months, I don't know what that percentage we had given in quarter 1.
In half 1, it has been about 270 crores, roughly.
Half 1, I would say if you take a total sales, the first half was how much?
Our revenue from operations in half 1, if I disregard the incentive under
3,000,
was about 870 crore growth in sales. Of that, I'm rounding off the numbers. Of that, about 270 crores came from commodities.
So have you got your answer? 270 out of 850?
870.
Out of 870 is coming because of raw materials. The first 6 months, sir.
Yeah. Got it, sir. Great. Thank you so much. This is very helpful. Thank you.
Thank you.
But you must understand these are estimated numbers. These are estimated numbers because there is a lot of indirect inflation in the components we purchase, which is very difficult to sort of put our fingers on.
Thank you. We have the next question from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. Thanks for taking my question. First is, how are you seeing the order book developing or production schedules developing post-festive season on the two-wheeler side in India?
Oh, I think this month is absolutely all right. I mean, we don't see now. Next month we have to wait and see schedules we get in the last week of this month. But this month, and see, I think in our case is also because of business wins, like I said, last 3 years, which are all coming up. They may be a bit late, but they've all started coming up. So I would say I can't tell you the number, but it's not going down for sure.
Okay, so will we say September, October, it is fairly comfortable except for the seasonality part of it, except for the festive season part of it. Good. Secondly, with respect to the ABS business which we have from Bajaj and RE, can you indicate what kind of share of wallet we have for them for ABS?
See, with Bajaj, we would be at about we are doing a single channel right now. So we are doing about how much for them? 18,000 to 20,000 for Bajaj, and about 8,000 to 10,000. 8,000. Say about 8,000 for Royal Enfield, but they want more. I mean, the question is, it more depends on us, But our capacity is 33,000 a month, which keeps going slightly up and down because of the volumes of these high-end vehicles slightly, But I would say 20 to 30 is something which we are, now doing, and we should do the full 33 from January for sure. Because next month is normally a dip because of most customers are closed last 4-5 days or a week, for their maintenance activities. And they have their block holidays. But shortly from January we'll reach the peak, and like I said, now our dual channel ABS is also the process of getting clearance. So that we are adding another 200,000 to the 400,000. So we'll have a capacity of 600,000 in a market size of I think 3 to 3.5 million. ABS requirements above 125cc vehicles.
Got it. And the second question is to Massimo. So firstly, on the outperformance which we have seen in Europe market, where we have grown at about 26% as against just about 0.4% growth, or even if I look at adjusted growth of 19%. What has led to that kind of a strong outperformance in the European market for us?
So, please, I told you that in the previous quarter, even if the registration were up only 0.4%, there was an increase in the production car in Germany of 42%. And so from my point of view, they are increasing the stock due to the fact that, first of all, if you compare this quarter compared to the previous of the last year, you have to consider that the second quarter of 2024-2022, when lack of semiconductor impacted in an important way. And so in this moment, from my point of view, the market is recovering, but only for premium car, because continues to be a critical situation for the semiconductor, and all the OEM are using the few semiconductor only for the premium car. In fact, if you analyze the profitability of everybody, the OEM in Europe, even if they are doing important reduction of volume compared to the previous year, they are increasing the turnover and also the profitability. And so the situation of the market is, we are not in the normality, because we continue to have a problem in terms of semiconductor, and also, let me say, please consider that in this moment we have more or less 10-11% of inflation. And so also the demand is very weak. But from our side, from Endurance, I'm pretty optimistic for the future 6 months, only for one reason, because we are entering production with several new products for the electric component. And please consider that in the previous quarter, the BEV, the pure electric vehicle, reached a market share of 11.9%, 22% more compared to the previous quarter. The PEV, the plug-in hybrid technology, reached 8.5%. So the situation is unbelievable, because in Europe in this moment 20% of the market is completely electric. And so, as you know, as Endurance, we started in 2015 with this technology, and in this moment we are having a benefit in our product mix. And also for the future months, I believe the situation will be the same, because for specific products as, for example, Porsche and also Audi, we are working 6 days per week.
Got it. And would it be fair to say from 3Q onward we'll see benefit of...
Mr. Gandhi, may we request you to please rejoin the queue? There are several other participants who are waiting for their turn. Thank you. We have the next question from the line of Pramod Amte from Incapital. Please go ahead.
Yeah, hi. Thanks for taking my question. First one with regard to the considering that you are increasing the ABS production and also Maxwell seems to be gaining orders. How do you see your import contents going up in the coming years, first? And second, with related to the same is to neutralize that, would you be looking at more export opportunities in the coming years so that you can balance it out in a better way?
Yeah, see, I will talk about the ABS, and then I think for the BMS can be answered by Akhil Aryan. As far as ABS is concerned, one, I think import substitute which we have done is by setting up a facility in-house for valve manufacturing, which is going to be a very good saving for us and very profitable. But what will continue to be, but we're not importing, I think, the ECU, right? That is coming from Mando Hella in Chennai. Chennai. So actually for ABS, we will not have much of an impact, if you ask me in terms of imports, because Mando Hella is supplying us the ABS ECU from their plant in Chennai. And we have, I think from next month or from this month end, we are starting the valve manufacturing in-house, which is a technology by itself, where we'll not only, it will be an import substitute, but at the same time we will save, we'll increase our margins because of this. And it will be pretty good margins. So we don't see an issue on ABS as far as imports are concerned. Because we like to be self-sufficient as soon as possible, when we start some of these high-end products. We like to do it in-house. That's why I talked about aluminum forgings and steel braid hoses in the past. So ABS, I don't see an issue. But as far as BMS is concerned, I think I will request Akhil to answer that.
Yeah. So look, on when you get into the domain of designing and manufacturing advanced electronics like Maxwell is, unfortunately the reality today is that there are not many global semiconductor companies who have set up shop in India. I think India is actively now as a country trying to overcome this. Of course, that's a bigger discussion. But in the context of the BMS product, we will have to continue importing the semiconductor components, right? So your controllers and all, there are of course active as well as passive components. Some passive components can be sourced locally, but a lot of the active components, if we want to build world-class products, then more often than not, we have to rely on, international semiconductor suppliers like, say, a Texas Instruments, a Microchip, NXP, and so on. And most of them don't have any presence in India, so we will have to continue importing that. I think that they had, of course, initially set up shop in multiple places around the world, but they are also de-risking themselves after the whole, China scenario as well as COVID piece happened. They've set up new plants in and around not only India, but also de-risk themselves outside of China. But anyway, to answer the question in short form, I would say that as we start setting up a manufacturing plant inside of Endurance for manufacturing and assembling our own electronics, Endurance will most certainly be placing orders on Maxwell's behalf to import some of these components. And as the volumes for Maxwell pick up, unless there are, ways in which India as a country overcomes the semiconductor dependence on other countries, and these large semiconductor companies set up shop in India, I would say for the foreseeable future, at least for the raw material of semiconductors, not the PCB or the assembly, we will have to depend on that, and so import will continue. However, I think from a strategy standpoint, we are very aggressively looking at international growth because, like I said, for us, we focus on either high volumes business in India or high margin business in Europe and also in the US. So we have now created a dedicated team that is like a small team. Of course, we're a smaller company, so we have a small dedicated team that is focusing on winning business in Europe. And we are focusing not only on the two-wheeler market there, but really also looking at industrial equipment like forklifts, excavators, and so on, because a lot of those industrial equipment are going from diesel to electric in Europe as we speak right now.
Sure. And related to that itself was the you addressed for your own Maxwell for export opportunity. Wanted to check with Anurag on the broader theme of Europe Plus One. How are you looking at the power prices giving you any opportunity to build your export business from India for metal forming as in the medium term? Any thoughts on that?
Yeah. See, our strategy right from when we did the acquisitions in 2006 is that we don't want to try and, be a substitute for our business in Europe. We want Europe to grow. I was so happy they have grown 25% this quarter. But we don't want to come in their way. Our exports have been on our own through certain companies like Getrack, for example, Ford Getrack. We've been supplying to them for many years. Of course, this year they've been down. Even last year they were a bit down, but we're getting new business from them. So we have our own exports to Europe. But we don't, our strategy is very clear. We don't want to come in the way of our European operations to try and take their business or try and take their customers unless we both agree that it makes sense. It should not go to a third party and then we take business, it's fine. But even if you see the sea freights were so high, now it's coming down. It was not viable to export. If you see, in the last 1 year, the sea freights just doubled or maybe it was more. It didn't make sense. So people were not even looking at India, to be honest. But yes, to answer your question, we have enough business opportunities here. In fact, like I said in the last quarter call, we have got a good business from Sanmina, which is a JV with, Geo, for their castings required for their cell towers. We got a good order from Generac for their gen sets for exports to the US. So we have enough profitable business here to deal with. So we don't want to come in the way of our European operation. So that is our strategy for the future.
Sure. Thanks and all of us.
Thank you. We have the next question from the line of Arvind Sharma from Citigroup. Please go ahead.
Yeah. Hello, good afternoon, sir, and thank you for taking my question.
Hi.
Am I audible, sir?
Mr. Sharma, your voice is breaking. I would request you to use your handset or come in the network area, please.
Sure. Can you hear me now?
Yes. Now we can hear you.
Indeed, sir. Good afternoon, sir, and thank you for taking my question.
Good afternoon.
Sir, two questions. First, on the domestic side of the India business, can you please give some details on the drive shaft business? What's the current revenue and what are the revenue opportunities there? That's the first question, and second question I'll ask after this on the European business.
Sorry, no. Okay, second question was, sorry, I didn't hear the second one clearly.
Sir, I'll ask right now. On the European business, what was the PAT for this quarter? And how do you think that the energy prices would perform over, you've given some idea, but over second half, how much can be the expected decline or easing out of the energy prices? So those two questions, sir.
Arvind, the PAT in Europe for quarter 2 was 1.7 million euro. On the energy cost, Mr. Venuti has explained in detail, so I'm again requesting Mr. Venuti to explain in a nutshell what he explained about the energy cost, how we see it panning out.
Sure.
So Massimo answer that?
Yes.
Massimo, you can just answer that again.
For sure. So, as I told you before, in the second quarter of this financial year, we have had a price of energy of 472 euro per megawatt and 208 euro of the gas. In this moment, the future for the Q3 show to us 300 for the energy and 120 for the gas. And so the situation is improving in this moment in terms of price. But in this moment, it's not possible, as you can imagine, to fix the price. And so we are living day by day. But in this moment, the price is going down compared to the previous quarter. For this reason, we are optimistic due to the fact that, first of all, there is a reduction, and second, we are receiving incentive support from our customers and also from the government. From my point of view, as I told you before, in the next quarter, the profitability of Endurance Overseas will grow compared to the previous year.
Sure. Thank you, sir. And on the India drive shaft business, sir, the revenue possibility.
So on the drive shaft business, I'm just checking. I've just told somebody to check the figures because we already started with Bajaj and Mahindra. TVS we are starting, in the first quarter of next financial year. I would not like to give you any, wrong figure, but I will. Let's see if I can get back to you during this call, itself.
Sure, sir. Thank you so much.
And what is the sales figure we are, expecting to do.
Sure, sir. Thank you so much.
Because we started this in July, of this year.
Yes, absolutely. Thank you so much.
Thank you. We have the next question from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead. Mr. Tiwari, I have unmuted your line. Kindly proceed with your question. Mr. Tiwari?
Are you audible?
Yes, please.
Yes. Now we can hear you.
Sorry. So firstly, on the margin side, you mentioned that from next quarter, the raw material prices should come down, mainly aluminum and steel also partly. So will it lead to margin expansion or already, like since second quarter, we have got the pass-through and all, or some pass-through is remaining with the customers?
So normally we do get the pass-through, but I would not say it is, this thing 100%, but because they don't address, different customers. Aluminum, steel, everybody will address. But there are so many other components like rubber and, there are sintered items, there are, bearings. So everything will not get addressed. But I would say almost 90% does get addressed, and it's all customer to customer. But that is something which we have been used to since the beginning. So it's not something which is new, which is there. But to answer your question, largely it is addressed quarter to quarter. Only the amendments, some of them come early, some of them come later. But the amendments do come.
So you mean to say that by, like say that, from third quarter margin should improve from Q2 levels?
Yeah, that's a focus to keep improving the margins.
No, so I'm asking this question because if you look at, our revenue versus pre-COVID has gone up. We are probably operating at the highest revenue on a quarterly basis, but our margins are significantly below what we used to do earlier. It's standalone I'm talking about. So can that normalize and generally what is the target range we are looking at, say, over next 1 or 2 years?
See, when we had margins of 14.5%, 15%, that time the RMC percentage was 62 to 63%.
Yeah.
That's okay. Right now, this last quarter, which is July to October, we were at 67.2% and 67.6% in the first quarter. So as these raw material percentages go down, it will have a direct upward impact on the EBITDA margins, the percentages. So you will see that improving, and definitely the trend is downwards now, for sure. And that is clear from all commodity because we are also buying it, for our supply. So it's for sure. So this will of course positively impact the EBITDA margin percentage as raw material goes down, the commodities go down.
And secondly, on this aftermarket sales, while there is a growth in the first half versus last year, there is a small decline of 5% if you look at the second quarter. So how should we look at this aftermarket sales going ahead? Because even the base in the second half of this year basically for last year is actually higher. So how should we look at aftermarket overall for the full year perspective?
This is mainly because of exports. One is to Sri Lanka, which was a good country for us, for exports, and so that was one. And Bangladesh, and third is Egypt. So we were impacted in these three areas, but what we have done is that our aftermarket is going through this merchant export route with these people who are in India. Because see, we cannot risk the payments, because that we are we cannot have any outstanding, debts and stuff like that. So of course, there has been a financial crisis, in Sri Lanka, which is a good country for our, for our aftermarket products. Bangladesh and Egypt. Egypt, we are seeing signs of improvement. But what we have done is we are going through these merchant export route. So that decline you see is mainly because of exports.
Okay. So
remarks. We are adding 4 new countries now in the next few months also. So, but overall there will be growth. This Q2 is only because of this reason. You will see a good growth in aftermarket.
Okay, so maybe because the issue this year may not be very high growth, so next year we can expect growth to again pick up, right?
Yes, for sure. See, that's why there are, like I said, there are external factors which are not in our control. So Sri Lanka, Bangladesh, and Egypt is one of those factors. But let me tell you, as far as the profitability is concerned, there is no compromise and getting our payments on time. That is something which is not going to be impacted.
Okay. And lastly, on the ABS side, how much revenue you would have done in the first half, or maybe a broad range for full year?
Normally, I don't give individual product-wise revenue. So I told you the volumes, no? We have now reached 28 to 30,000. We'll do 33,000 from Jan, because next month we should see a dip because we block closures, like I said. And we are adding another 200,000 ABSs for dual channel. Also, so... But I can't give you individual. We have not been saying that. We don't declare product-wise.
That 200K capacity will come up in Q4. The 200,000 capacity of dual channel.
I think will start from Q1, isn't it? It will start from Q1 because the lead time is there. There is some imported machineries here. Yeah. Okay. So it will be more up towards the end of Q1 because the imported machineries will take 6 months, to come. So we have placed the order.
And 1.2 million you said will come up by second half
of 2024. Second half.
Calendar year or financial year?
It will be in the second half financial year.
Okay, so by March 24.
So it will be more towards the third quarter of 2024. I mean, when I say third quarter, means of, okay, or it will be the fourth quarter of calendar year, if you say 2024.
Fourth quarter of, this is December 24.
Year 2024.
Yeah, calendar year, yeah. Okay, fine, thank you. That's all from my side.
Thanks.
Thank you. We have the next question from the line of Aman Agrawal from Carnelian Capital. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. So I have 2 questions. First is on our incremental capital allocation. So in past we have allocated the capital very wisely, and that has led to sales growth and profit growth for us. So going forward, sir, which area are we looking to allocate more capital? Will it be more towards diagnostic products like drive shafts and all? Will it be towards EV-related products like BMS and all? Or will we be focusing more on gaining in the PV opportunities, or like increasing the PV share?
So it's a combination of, everything. I think drive shaft, we have enough of capacity, but see, that's still a smaller business right now. It's not, in fact, such a large business. And that capex we have already done. So I don't see there's much of capex there going at all. The focus, of course, will be on, on the high-end suspension, on the brakes business, on the machine casting business, also for 4-wheelers, adding more and more machining, fully machined in castings. EV, of course, will be a major focus for us, but that's a part of the suspension, brakes, and casting business. We'll, of course, be investing in our own assembly lines for the BMS. We hope to start in the first quarter of next financial year. Target is April now, 23, which will help us really improve our margins also on the BMS rather than buying from outside. The strategy, we have followed for 10, 12 years. So critical operations we like to do in-house, So I think the major, we'll go for anything which is profitable growth. So all these, like I told you, whether suspension, brakes, machine castings, backward integrations also which are happening, towards, hoses and aluminum forgings, you will see more going. So I think it will be in all areas where the business opportunities are coming for us.
Understood, sir. And my second question was on this new technology evolving in casting globally, called one die casting or integrated die casting, where some of the players like Tesla are basically using a large machinery to cast the PV machine at once, like the overall structural body of PV at once. So like in terms of our European business, like do we see this as an opportunity, a threat, or how do you see this in terms of our European business?
Yeah, I will request Mr. Massimo Venuti to answer that. Massimo?
Yes. So for sure, this new technology of the big high pressure die casting is absolutely interesting for the production of the chassis, but in this moment, all the European OEM are investing in this technology, not the supplier, because it's not possible to move to transport this part. And so this will be a technology from a point of view that can insource the OEM. In this moment, also speaking with the supplier of this big high pressure die casting machine, only the big OEM are trying to implement this technology, because as you know, this technology is very well known in China and also US, because of the technology of Tesla. But I don't believe that this could be an opportunity for Endurance in the short time.
Understood, sir. Thank you and good luck, sir.
Thank you. Ladies and gentlemen, that was the last question that the management could answer today. I would now like to hand the conference over to the management for closing comments.
No, I don't have anything further to add. I've mentioned in my opening remarks what I had to say. Only one thing I would like to say, that we are very, very positive about the future.
Thank you. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.